Strategy's preferred stock just hit its lowest price ever. $82.53 this morning, down 15% in 2 weeks. The par value, the price it's supposed to trade around, is $100. That's not a rounding error, but a 17-point gap on a product that was sold to investors as stable, low volatility income. And right now, the same time that the price cratered, Strategy dropped this post on X. The kind of post that's meant to calm people down. It said they have 32 years of dividend coverage through their Bitcoin reserves. That Bitcoin only needs to appreciate 3.1% a year for everything to work out fine. On paper, it should have been reassuring. It wasn't. And here's what nobody is connecting to the story. A detail that got buried in price panic. A detail about how this product was built in the first place. I have the receipts because when you find out what I found out about the process behind the financial engineering that the world's largest corporate Bitcoin holder is now prepared to sell Bitcoin to protect, the question changes entirely. It's not, is this a death spiral? The real question is, should you have trusted this product to begin with? Welcome back to Satoshi. Let's get into it. Before we get started, smash the like button, share the show with your friends, and subscribe to our channel if you want to support the show. Now, let's get started with the facts on the ground. STRC is Strategy's preferred stock. That's Michael Saylor's company, formerly known as MicroStrategy. It's not Bitcoin, it's not MSTR shares, it's a financial product that pays an 11.5% annual dividend with a par value of $100 per share. The pitch was simple: steady, low volatility income backed by the company holding more Bitcoin than any corporation on Earth. For most of its life, it delivered. STRC spent the last several months trading in the $99 to $100 range, and it barely moved. It was almost like a stable coin, which, as we'll get into it, is kind of the problem. This morning, it dropped to $82.53, the lowest price ever. It's since bounced to around $86, but we're still talking about a product that's sitting 14 points below where it's supposed to be. And then Strategy did something that made this worse before it made it better. They posted, and this is their official company post, that they have 32 years of dividend coverage through their Bitcoin reserves, that they hold $55 billion in Bitcoin, that annual dividends and interest obligations on STRC total $1.7 billion, that even without Bitcoin appreciating a single dollar, they can cover that for over 3 decades. According to their 8K filed June 15th, Bitcoin only needs to compound at about 3.1% annually for Strategy to service those obligations indefinitely. The math is fine. I want to be clear about that up front. The math is not the problem. The problem is the second thing that this post implies, which is that if they need to, they will sell Bitcoin to protect this product. And the man who has said publicly, repeatedly, that Strategy would never sell Bitcoin is now walking that back. There are clips all over the internet. He said it multiple times, and now Strategy is saying, well, we could sell all of it if we had to. That's the subtext of this post, and honestly, the market read it exactly in that way. Now, Jesse Myers, Croesus BTC, head of Bitcoin strategy at Smarter Web, and one of the most rigorous thinkers in this space, posted a thorough breakdown today. His read is, "This isn't a fundamental collapse, it's a liquidation cascade." Here's the thing, STRC spent months trading in the $99 to $100 range. That predictability invited leverage. If you expect something to always stay above $95, you can borrow against it at 20x and dramatically juice your yield. Lots of people did. Then the price dipped. Margin calls triggered. Forced selling pushed it lower, which triggered more margin calls. Classic cascade. And Jesse says opportunistic short-selling hedge funds may have spotted the setup and accelerated it. His conclusion is the market will heal itself. Hedge funds will recognize it's a fire sale when the fundamentals are unchanged, step in as buyers, and the shorts become buyers on the way back up. Buyers right now are getting roughly 13.7% effective yield. If STRC trades back to $100, which Jesse expects within weeks, that's an 18% return. Jesse also says strategy will likely raise the dividend rate on June 30th, possibly to 11.75% or maybe even 12%. We don't know, making current buyers' effective yield even higher at around 14.2%. So the math looks like a stress test, not necessarily a catastrophe, but here's where I need you to stay with me because there is a layer to this story that isn't about the math at all.
My question to Michael, I asked two. One was, what's MNAV? What's the definition of MNAV? Because it seems to be an increasingly important metric. There's seemingly multiple different ways to calculate it. It's almost like depending on the company or the person, it changes definition. And obviously, if something is so fluid in definition, it's hard to have conversation. And what I consider to be critically important is what is called out-of-the-money securities. I'll give you an example. 21, we raised a convertible bond in our note. So when our stock was at $10, we raised this note. And we raised it at what's called an up 30, which means a 30% premium it converts to equity. I'm going to slow all this down. So if our stock's at 10, a 30% premium, 30% of 10 is 3. So that'd be, it converts at $13 a share when our stock's at $10 a share. Does that make sense so far? So we raised an up 30. Right now, our stock is around 5. So that's what we call an out of the money security, is the conversion is so far away from 13 because the stock's at 5. And so if someone wanted to buy 21, they wouldn't consider that equity because it's so far from converting into equity. Does that make sense? Because the stock's at 5. And so you wouldn't factor that in to something like the market cap or the MNAV. That would be classified as debt because it's not converting into equity anytime soon. And so my question to Michael was exactly that, which was, do you agree with classifying out of the money securities as equity, which obviously that would inflate the equity value, which would make an MNAV metric more attractive? It wasn't a bad or good thing. If someone asked what's 21's MNAV, I would not include that convert. I would think that would be not right. And by the way, if someone wanted to buy my business, no banker or no analyst or no one, like the buyer of the company, also wouldn't include it. So one, that was the question, which is like, can we define this thing? And if not, that's information for me, but I'm just trying to learn. And then the other was about dilution, which was, they're both related, which is like, well, when you sell common equity, so when you create new shares and sell it at the market, obviously the MNAV is really important metric to figure out if it's dilutive or accretive or if it's pro BTC per share, all of these metrics, which I'm obviously a fan of. And Michael had made a comment and said, even if I sell shares for cash and don't convert it into Bitcoin, that's not dilutive. And I was like, well, if I start a company, I raise $100,000 for 10%, which implies $1 million valuation. Previously, I had 100% of the company. Now I have 90% of the company, and this new investor that gave me $100,000 owns 10%. Just by definition, we call that a dilutive transaction because my ownership in the business went down. I got cash for it, but it's still dilution. And if that's not dilution, what would be dilution? Like if you're just exchanging equity for anything, then theoretically there's no such thing as a dilutive, which is also fine. But then again, it's hard to have a conversation when there's no definition of MNAV, and there's no example of a dilutive transaction. Well, then what's the point of having, when people ask me, was that dilutive or accretive, or do you think that the MNAV is proper? If there's no definitions to any of these things, then I can't. The context as well is I was on a panel before that. I was on the panel and people were asking me questions and bringing up things. And I'm like, guys, if we don't know the definition of these things, we can't have a conversation. And then anyway, I was getting in my Uber and someone texted me and said, Michael is happy for you to come back and ask the questions to him directly, and that's what happened. So
here's the thing about the strategy post that nobody is saying clearly enough. When strategy sold 32 Bitcoin last week, which was roughly about $2 million worth, and 0.004% of their holdings, everyone lost their minds and the Bitcoin price dropped. That's how sensitive the market is to Saylor's moves. He's been the buyer of last resort. Every dip, he was there. And now he's not just not buying, he's signaling that he might sell. Think about what that means for the Bitcoin price if strategy becomes a consistent seller to service $1.7 billion in annual obligations. We're not talking about just 32 Bitcoin. We're talking about billions of dollars of selling pressure on a market that's already in a bear market at $62,000. And here's the compression problem that they're facing. MSCR, the stock, has seen its premium compressed to nearly 1x NAV. That's the tool strategy has been using to raise cash, issuing new MSCR shares at a premium and using the proceeds to buy more Bitcoin. But if the premium is gone, the machine stops working. And if that machine stops, the remaining options are raise the dividend rate, which increases cash obligations, find new debt, or sell Bitcoin. The market is pricing that corner in. That's why STRC is at $86 instead of $100. Meanwhile, the dividend coverage stat itself is raising eyebrows. In November 2025, Strategy was reporting 71 years of coverage. Today, it's 32 years. What changed? They paid off $1.5 billion in 2029 convertible notes, which means their cash on hand for dividends went from about 2 years down to 7 months. 7 months of runway in a bear market. That's not necessarily a death sentence. The consensus view is that Bitcoin will be recovering before that 7-month clock runs out. Fingers crossed. But it's also not the story of infinite effortless leverage that was sold to STRC investors. This is a confidence crisis, not a math crisis necessarily, but in a market, that difference barely matters when the sentiment is this fragile. Before we get into the part of the story that I think nobody's talking about, I need to say this. Everything that we just covered is what happens when you put your Bitcoin into the financial products you're trusting someone else to manage. The Bitcoin is there, on paper it's fine, but you have no control. You have no keys. You're one confidence crisis away from watching your wealth become a line item on someone else's balance sheet. The Bitcoin way has been helping people take actual control of their Bitcoin for over 20 years. Your personal Bitcoin IT team, self-custody training, cybersecurity, Plan B residency, over 20 years of expertise. They simplify the whole thing so that you stay in complete control of your stack. Book a free 30-minute consultation at thebitcoinway.com/simply. Tell them Satoshi sent you.
When we did Stretch, I designed all these with AI. I couldn't have done it myself. I literally sat and I used artificial intelligence and I went back and forth with the AI for a few hours. And
so you were just on ChatGPT, just like the rest of us, figuring out how to design these different offerings.
And arguing with it and saying, can I do this? Can I do that? And at some point I said, well, I want a monthly preferred and I want it to be stable at 100. It says, well, you can do this and this and this. I said, has anybody ever done this? And it scans for 10 minutes, says, no one in the history of the world has ever done this, but it's totally legal and it's totally reasonable to do it.
Okay, here's the part that I've been building up to. Coin Bureau came out with this report. Zach Vol posted about it, and it got about 1.7 million views. Michael Saylor, in a recent interview, said that ChatGPT helped him design STRC. That's crazy. Zach put it plainly, STRC is down 15% in 2 weeks. Saylor said he designed it with ChatGPT. Now, I want to be precise and fair here because this is my opinion. I'm flagging that clearly. AI tools are used in finance. I'm not saying that automatically makes a product bad or that the math doesn't work. Jesse Meyer's analysis still holds. The 32-year coverage figure is still real. What I'm saying, though, is this. The entire Saylor thesis for the last 6 years has been built on a very specific kind of trust. Not just trust in Bitcoin, but trust in Saylor's relentlessness, his depth of analysis, the idea that he has thought about this more than anyone on earth, that the conviction is earned through rigor. That's the foundation the whole structure rests on, not just the math, the credibility of the mind behind the math. If you bought STRC or if you felt reassured about it, at least partly because of who Saylor is and how carefully you'd believed he'd engineered it, and then you find out that structural design was workshopped with a chatbot, what does that do to the foundation? I'm not saying ChatGPT is incapable of helping design a financial product. I'm just saying, though, that if you would have wanted to know that before you put your money in, you had a right to know it. And I'm saying this is the thing that's sitting under the confidence crisis that everyone is talking about, but nobody is naming directly. People aren't just scared about the math. They're scared because they're starting to wonder how much of Saylor's certainty was earned and how much of it was performance. He said Bitcoin would never be sold. He did say that multiple times, and now he's walking it back. He positioned himself as the prophet who understood this better than everyone, and now the product he sold on that positioning was designed with the same tool that your college nephew uses to write his term papers. That's not FUD. That's a reasonable recalibration of trust, okay?
When markets are down, people are desperately looking for a story. Like humans are like storytelling creatures at their core. There's a reason we talk the way we do about other people, and we latch to stories to understand the world. It's like a framework that we use to like understand what's going on out there. And when the market's down like this, people really want a story for why that's happening. When there's like an FTX collapse, there's a really easy story to latch onto. In our present market, that story is much more fragmented and less clear than it has been previously. I am of 100% agreement that the AI thing is a large part of it. One of the more interesting narratives I've looked at was like how frequently AI is talked about over time, specifically among Bitcoiners, and it's up and to the right very consistently. It's really taking a large amount of mind share. But there's also a really interesting element happening right now among like how much algorithms are kind of bucketing us into different groups, and among the Bitcoin community specifically, how fragmented we all are now too. Saylor just did a piece that I've been thinking about where he like buckets Bitcoiners in different groups, and like if you're a Bitcoin capitalist person, if you're really into the treasury companies, you're in a totally different window to the people that are like building stuff. And it's kind of a weird dynamic in Bitcoin right now where there is these really isolated environments. They're all kind of experiencing different things. So some of the group camaraderie that's happened in like 2022 just is not happening in the same way right now, even though price is in a similar position.
Here's the bigger picture that I think the STRC story is actually a symptom of. Michael Sullivan wrote a Substack piece this week that I've been sitting with. It's called The Fracturing Ideologies of Bitcoin. Same Bitcoin, same price chart, but different emotional realities. His framing, drawing on a recent Saylor article, breaks the Bitcoin community into 4 camps right now. The Bitcoin capitalists, the ETF crowd, the treasury company crowd, the Wall Street integration crowd. They believe Bitcoin is being financialized, and that's exactly how that was supposed to go. They're relatively calm. They see this as a stress test on the way to global reserve currency status. Then you have the Bitcoin technologists, people like Jameson Lopp, Kia, Mike Corallo, focused on scalability, privacy, security, and building. They're handling this bear market the best, in my opinion. They've got something to work on. And then there's the Bitcoin fundamentalist, the self-custody crowd, the Bitcoin is money, not a financial product crowd. They're the angriest. And Sullivan's data shows it. The sentiment charts for Bitcoin fundamentalists are in the red right now. They're not just down about the price. They feel like something really important has been taken from them. Because here's what fundamentalists have been saying for years. When you financialize Bitcoin, when you layer preferred stocks and ETFs and digital credit products on top of it, you're recreating the system that people came to Bitcoin to escape. You're adding fragility, you're adding counterparty risk. You're building a new Wall Street on top of a protocol designed to replace Wall Street. The capitalists call that validation. The fundamentalists called it a capture. And right now, watching the world's biggest corporate Bitcoin holder signal that he might be selling Bitcoin to protect a preferred stock product that was designed with an AI chatbot, the fundamentals are not feeling vindicated. They're feeling fatigued. And here's my honest take. I don't fit cleanly in any one camp. I think institutional adoption was probably inevitable and probably necessary for Bitcoin to become what it needs to become. The ETFs, the treasury companies, they bought capital and attention and legitimacy that accelerated the timeline. I mean, my dad is buying Bitcoin on Charles Schwab, and this is in some ways, everything that I could have asked for 4 years ago. But I also believe as strongly that the game is being played on top of Bitcoin right now. The financial engineering, the leverage, the yield products, it's not for people who don't understand the risks. And I think a lot of the people who bought STRC didn't fully understand the risks. Not because they're not smart, but because they were told it was simple when it wasn't. And if this moment is clarifying something for you, if watching all of this play out is making you want to just own the thing directly and stop worrying about the layers on top of it, Bitcoin Well is the simplest, cleanest on-ramp for self-custody Bitcoin that I know of. Bitcoin Well is the self-custody Bitcoin on-ramp. You buy Bitcoin directly into your personal wallet. No custodial risk, non-custodial by design, trusted by 50,000 plus users, publicly traded, daily recurring buys available. Sign up at bitcoinwell.com/simplybtc. Through our link, you get 3 chances to win 1,000,000 sats. That's 0.01 Bitcoin. Sign up at bitcoinwell.com/simplybtc.
If the buyer of last resort now turns into a seller, it's not good for Bitcoin bottoming out at 60K, okay? That's where this controversy is coming from. I think it's going to be one of these things of just patience. Time will tell. But where we're currently seeing, there is a lot of pressure on STRC. There's a lot of pressure on strategy. There's a lot of pressure on Saylor right now. But again, I just hold Bitcoin. I'm a spot Bitcoin holder. That's what we always recommend on this show. That's what we will continue to recommend on this show, is that you should just be buying Bitcoin, taking it into self-custody. And yeah, maybe you will miss out on some opportunities, but you always got to ask yourself one simple question. Is the risk of losing your Bitcoin worth whatever gains you are being promised? And if you don't understand the risks of the product that you're investing in, then you probably should not be investing in it. That's been the thesis. That's been our perspective on any kind of investment strategy on this show since the existence of this show. You know, not financial advice. Actually, I'm going to take it from Adam Livingston, you know, the MSTR Bitcoin Treasury guy. Not financial advice, financial entertainment. That is my official view on how I live my life. You know, this is me eating my own soup. If you do not understand the risk of you giving up control of that Bitcoin to chase yield, you probably shouldn't be doing it. Hence why we say, just buy Bitcoin consistently, take Bitcoin into self-custody, let everyone else blow up, and you still have Bitcoin in self-custody and you win. The goal is getting over the finish line with the most Bitcoin under your control as possible. We've seen different versions of this game play out in the past. People want to get more Bitcoin, so they give up their Bitcoin to chase more Bitcoin, and then what happens? They lose on the Bitcoin. We are doing our best to make sure that you guys do not lose your Bitcoin that you currently own chasing more Bitcoin. That's what I recommend. That's what I do. That's what I tell all my friends and family on air and off air. If you don't understand the risk, do not trade your Bitcoin for it. Just take it into self-custody. It's not sexy. It's not pretty. It's kind of boring. You just buy Bitcoin and you store it in self-custody. Yeah, maybe you're going to miss out on the Bitcoin treasury boom that we saw last year. But in 10, 20 years, you might be the only one left holding Bitcoin. Now, obviously, that was a little hyperbolic. But if your friend is doing something risky with this coin and you're just doing the boring, safe thing, I will venture to guess that you will probably make it through this war. Remember what we've been saying for a while. The era we are entering right now, the name of the game is incentivize you to give up your Bitcoin because there's not that much Bitcoin going around, and Wall Street and these institutions and these corporations are coming in, and the only way they can get that Bitcoin is if they get it off you. So it's upon you to not fall for the trap.
I never bought STRC because I'm a Bitcoiner, and that's not because I think that Saylor's a bad person. I actually admire him a lot, and I genuinely believe that his accumulation has been the only thing keeping the Bitcoin price from going lower in this bear market. So I don't want strategy to blow up. If strategy actually collapsed and started selling billions in Bitcoins, we're talking about a prolonged bear market. Maybe 10 to 20K Bitcoin. And that's bad for every single person watching this. That's not a scenario that I'm rooting for. But I never bought STRC because I don't put my money into things that I don't fully understand. And I'll be honest, when I tried to understand STRC at launch, it took real work. But then again, I'm just a girl. It wasn't a simple product. Preferred stock with $100 par value, 11.5% annual dividend funded by MSTR, share issuance tied to a Bitcoin treasury with a complex interactions between leverage, MSTR, premium, compression, da-da-da-da-da. Literally, my head is going to explode. That's not a savings account, okay? That's like a multi-variable bet. The thesis on this show has always been very simple. That's why we're called Simply Bitcoin. Buy Bitcoin, take it into self-custody. Don't give it up to chase the yield that you don't fully understand. Don't trade sovereignty for income. This moment, watching STRC crater, watching strategies never sell Bitcoin promise dissolve in real time, watching people who thought that they were getting stable income lose 15% in 2 weeks. This is why. And here's the thing that I want to leave you with. The era that we're in right now, the name of the game is getting you to give up your Bitcoin. Wall Street has products for it. They have ETFs, preferred stock, yield vehicles, treasury plays. Some of them are legitimate. Some of them are well engineered, and almost all of them require you to hand your Bitcoin to someone else and trust them with it. That trust is not free. It has a cost, and the cost is counterparty risk. Every time you give up your keys for yield, you're taking on someone else's solvency as a risk, someone else's decisions, someone else's math, and sometimes someone else's ChatGPT conversations. The boring answer is still the right answer. Buy Bitcoin, hold your own keys, get over the finish line with the most Bitcoin under your control. That's it. That's the show. If you watch this show, then you know what we're about. Freedom of speech, moving Bitcoin forward, owning your own money and not asking permission. The Rumble wallet is built exactly for that. They just launched their new wallet and the setup is simple. Head over to wallet.rumble.com/simply and use Simply10 to get $10 for free today. Self-sovereign, self-custody, and it supports the platforms and creators who actually stand for something. Go grab your $10 at wallet.rumble.com/simply, code Simply10. I've been through a few of these now, and the bear markets are where everything feels worse than it should, where price isn't moving and the community is fighting and someone that you trusted is quietly backing away from what they promised. I remember explaining Bitcoin to people at dinner parties and getting the looks and the polite nods and the "that sounds risky" dismissals. I didn't have Saylor's billions. I had conviction and patience and a pretty embarrassing amount of my savings in something that most people thought was going to go to zero. And I held because I was sure, because I understood what I owned. I knew exactly where my Bitcoin was. I knew nobody could take it from me. I knew that the math of 21 million couldn't be changed by a board of directors or a stressed preferred stock or a tweet that walked back a promise. That certainty is boring, I know. It doesn't have a Substack following. It doesn't have a conference stage, but it's the thing that gets you through summers like this one. Make it through the summer, guys. Thanks for watching Simply Bitcoin Satoshi. Don't forget to smash the like button, share the show with your friends, drop a comment below because I read them all. Follow me on X at InternetSophie and go follow our channel as well. As always, stack, slay, and stay bullish, baby.